Okay, it's 8:05, so let's get started. My name is Dimitri, streaming this on behalf of Absolute Alerts. Today's topics, we're going to cover how to find the best stocks that you want to invest in or add to your watch list at the very least. We're also going to do some additions that I decided to add last minute today, or technically yesterday, which is how to get out on time, how to take out percentages. And so when you're green at the beginning of the day or midday, whenever it is, so you don't end up red. Because I noticed that there are, I would say, more than a few people that are bag holding, and that's an issue. One of the issues with bag holding is a fundamental issue, I would say. And the fundamental issue comes in the form of you do not know when to sell, and that's when greed comes into play. So say we have a stock that we bought into at $6.50 a share or $6.40 a share, and now you see it's at $7 a share. If you're like me, you're buying 1,000 shares at a time, so every penny comes out to $10. So if you bought it at $6.40, now you're looking at $7 a share. You made a decent amount of money. $10 per penny. Do the math. So what you want to do at points like that is you want to remove a part of your percentage. And the reason why I'm covering this first is because before I show you how to find stocks, you need to realize how to play the stocks, how to take out that money, how to make sure you secure your profits, and so on and so forth. So you take out, say, a percentage of your stock. Say you bought 1,000 shares, $6.40, price hit $7, $7.20, whatever it may be. But then after that, you want to take out your initial investment of, say, 10%, 20%. Some people like to do 50% right over the bat. It all depends on your strategy. But you do that just to make sure that you still come out green. You take that initial profit, because you never know how a stock could go, especially when it goes parabolic, which I'll explain to you later in this session. So make sure that if you want to stay green, you want to stay in the positives, you always take out percentages as it moves. For example, when Athletic Being says, when this price point breaks, like let's say when $7 breaks, he's going to add. Before, in my version at least, I don't know how he does it himself, but what I do is when I see that profit, I take out a share, I take out a portion, and then I wait for it to break that price point, and then I'll add again. Why? Because I know that it's broken the high. It's broken its support. I mean, its resistance. That's what you have to look for. With stocks, it's all a game of support and resistance. It's always going to bounce off. Every time it breaks its new high of day, it creates a new resistance. It creates a new support. So now let's get on to the main event of the evening, and that is how I find my stocks personally. And there's a couple of ways, so I'm going to give you a run through of a couple of different ways to find stocks that you could play every single day, no matter what you're doing. Well, of course, unless it's a weekend, then you really can't do nothing. And unless you do futures, you can't play, 24/5. If you guys want, you could request a futures video. I'll show you how to trade futures. That's fine. MES and all that. But moving on. So FinViz is one of the main things that I use. You go to finviz.com at first. When you get to FinViz, this right here, this is what's called a heat map. And it's basically going to show you what is hot and what is not. And you could see that by the color, red, green. It's pretty self-explanatory. So you use the heat map to identify what sectors are hot. At least that's the way I do it. I look at the sectors. I don't look at the specific names or the specific tickers, whatever you want to call them. I look at sectors, right? Like today, for me, technology was hot. And what was the first thing? Technology. Finance is hot, but then all the way down here, you got basic materials, I think MATE stands for, I don't know, and utilities is just gray. So that's really not that interesting. This list right here, it's important. This should be the first list that you look at. Why? Because look at the tickers. SGOC we covered today. STMP we covered today. TPST we covered today. TBLT we covered today. You get where I'm going with this. And it's showing you top gainers. It's showing you a new high of days. It's showing you unusual volumes. It's showing you insider buying. It tells you everything you need to know. On this side, you got the top losers. I'm going to get into why that's important later also. That's more for swing trading. And this session is focused both on swing trading and day trading, because I know that not everybody has the capital required in order to do day trading, unless you're in like the Bahamas or I don't know, somewhere like that. Even then, it's risky. But so, this is the first page you look at. This is the first page you look at stocks for, especially when the market opens. This gets updated often. Then after this, the next thing you're going to want to do is you go to Screener. Now on Screener, there's a couple of things you're going to need to enter. So I'm going to try to go over them a little slower instead of rushing through it, because I don't want you guys to have to rewatch this video as much as I would like that, because it gives, absolute alerts more attention, which is better for us. Hold on, I'm sorry. I have to take a little detour. There's more people coming in. Okay, there we go. So when you get to the Screener, the first thing they usually want to do is you want to go to the All tab. So you want to make sure you look at everything. Then you want to set your market cap. Now, what the market cap is you want to look for smaller companies, because smaller companies are going to be affected in a much bigger way than a bigger company would. For example, a company that's small, if they announce a merger, take what was it, MTSL, I think, today, and GSOC. I'm sorry, sometimes I get the letters mixed up. They got affected in a huge way over news that was relatively small when compared to a company like NEO. They had, NEO's Green Day today, and their stock is dropping. So usually what I go for is small, which is under 2 billion. You said that, it automatically lowers your search results. The next thing you want to set is your price. You want to capitalize on the share price. So, not that one. Where is it? There it is. Okay, so you want to go for usually under 20, because the reason why you set your price for under $20 when you're in a position like mine, especially when you're doing call outs, is because you really do not know the other person's capital. You don't know how much money they have to invest. You don't know how much money that they're playing with. Nothing of that sort. So you set your price today to under $20. Let's get smaller. Now we have 20 stocks. Then you want to go and you want to set your average volume. Now, a person like me, I'm very, very, very specific about my volume. I do not like stocks with, 300, 400,000 volume. But for the purposes of this video, especially for beginners, beginning traders, beginners, whatever you want to call yourselves, people who are just learning how to trade, $300,000 to $400,000 volume is good enough, because for you, a green day should be considered a green day no matter what. If you win $10, you made $10 sitting at home on your computer. It doesn't matter. That's it. Because the way you have to think about it is, if you cannot earn $10, how do you expect to earn 100 or 200 or 300? So you move forward based on that kind of mentality, that kind of logic. So, you set your, what's it called, average volume to say over 400,000. I hate clicking that, but I'll click it anyway. And now the next thing, and this is the most important thing, this is where volume breakouts come into play. And there's always channels for volume breakouts. You said the relative volume. The relative volume is the volume compared from yesterday's volume or early, whenever's volume compared to right now. Like, what's the volume right now compared to before? That's why, it's self-explanatory, relative volume. So say you change the relative volume to over 2 or 1.5. That's the ideal amount. So I'm gonna put over 2. And right there, you already have, we start off with a list of, thousands to, we got 3 pages of 20 shares. So that's about 60 companies. I don't know what the third page is. I don't know if it's 15 shares, whatever. And the last thing you want to do is you want to set the float. What is the float? I'm not going to go into too many technical details right now, but I will tell you this, it does impact shorting ability. And the less float you have, the less shorts you're going to have. It's as simple as that. So, you go to float, and, you could even see right here, float short. And the way floats work is, that's the amount that any brokerage has at one time to loan somebody to short a stock. Now, usually on the average scan, you would put under 20. If you want to go really, really specific, you could put it under 5. But for the sake of this example, let's put it under 20. And right there, you have basically your top players of the day. And just off of this first page, you can see that most of them are green. What the fuck is this? So, right here off of the first page, you can see that most of them are in the greens for the day. Second page, most of them are in the greens for the day. And the same goes for the third page. We have 1 red. That's it. And, a lot of these stocks that you're going to see on this page, from XELA to TBLT, we played today. So this, you need to know this, and it doesn't matter what platform you're using to scan for stocks. I'm going to show you guys TD Ameritrade later. I'm going to show you Benzinga for those of you that have it. I'm starting with FinViz. Why? Because it's free to use. It's accessible to most people. So I felt like that would be a good beginning. So you look at the floats, you look at the market cap, you look at the average volume, you look at the relative volume, and you set your price depending on your capital. For those of you that have smaller capital, you have plenty of options. From $20, you could set it to under 10. It really comes down to what you want to do and how do you want to play. There, for example, that's a loser today. I'm kind of ashamed of that because I was actually expecting that to go up pretty high and pretty nice. But this is one of the ways in order for you to be able to find the stocks for the day that you want to be looking at. Average volume, market cap, float short, relative volume. Once again, I'll repeat, the relative volume and the average volume, the difference between those two is very simple. The average volume is the average volume that the stock has per day. The relative volume is the difference now between per day normally and today at the moment. So when you see posts in the volume breakouts channel, this is where they're coming from. We're scanning for stocks that have volume breakouts, that we see that the relative volume has suddenly went, you know, parabolic, or whatever you want to call it. Now, if you're a member of Benzinga, I'll give you a demonstration of that also. I'm not going to go into the full details as usual, but I'm pretty sure that you'll be able to get the gist of it because the options are the same. And when it comes to Benzinga, it's the same thing. You're going to pull up a stock screener. This was from something I was doing back in the day, or a couple of days ago. Now, in Benzinga, if you do use Benzinga, I would highly recommend that you always keep an eye on SPY. However, SPY is moving, and you could even pull the chart up for it as well. You know, there's different workspaces that you could do, which I'll go into in another session. If SPY is going up, you could expect your stocks to go up. If SPY is moving down, it's the same exact thing. You could expect that your stock price will drop. If you think that your stock is special, believe me, you're wrong. If the SPY drops, your stock is dropping. That's just the way it is. They're linked. It's the same thing with CARV and UONE from yesterday. When CARV started going up, UONE went up. Why? Because they're in the same sector. They're pretty much working together. SPY, though, works for the entire market. So when SPY goes up, stocks are going up. There are, of course, those, you know, occasional exceptions. Now, for the screener, you know, I don't know if you have Benzinga Pro or not. If you don't, I'm not going to recommend you get it, but I'm not going to say don't get it or get it because I really don't care. But with Benzinga, you have a lot more options. You know, you could set all different kinds of things. You got your relative volume here, you got your float here, you got percentage floats, you have everything. I personally use Benzinga to, you know, find my stocks daily. Another thing that I like about it is with them, you know, you could also have your watch list. Like this is from June 21st. This was my watch list from June 21st. And then I could take this watch list and I could create another tab that shows me news articles directly correlating to my watch list. If you go to sources, you could add your watch list in here by going to watch list and selecting yours. So, you know, Biomed, June 21st. Exit out of that, and here's my Biomed June 21st watch list with some other stocks. Now, gappers, I'm gonna try to give you a brief explanation, but I'm not gonna go into detail. Gappers are basically price gaps. Like right now, for example, for today, we were trading. Let's see, what was it? MTSL or something like that. Yeah. So right here, holy crap, it took a nosedive real bad at the end. But there is a good possibility that this stock is gonna gap up. At the moment right now, the sell and the buy, the spread is only 1 cent, with sell being $6.02, the buy being $6.03. But this would be considered a gap right here, what you see here. Now, come Monday, we could see this gap go upwards to, upwards of, say, $9 pre-market. Now, for those of you that have Weibo, for example, you could trade at 4 a.m. You could take out your money right then and there. Consider yourself, done for the day, if you have enough shares, of course. If you don't, then, well, you can't do it. I'm sorry to burst your bubble, but it's just not how it works. But gaps are risky because you have to know how to play the gap. And that's why I said I'm not going to go into the technicals of how to play the gap, because that right there in and of itself is a whole different lesson on how to play the gap. But when you have a stock, for example, today that after hours, it went from $4 and some, what was it, 474, and it went to 602 and 603, as you can see here. That's a pretty big deal, even though the news for it was really not that, I wouldn't say it's something that will cause a catalyst of that, magnitude. It's just not my opinion. All they did was announce some, I think it was like a merger or something like that. But the thing is, nowadays, the stock market's changing. They're not really looking for technicals anymore as much as they are for fundamentals and social analysis and things like that. For example, like Newegg, which the symbol for it was NEGG, went from, I think, what was it, $18. So let's move back the chart to 5 days. Let's close active trader. So this was Newegg before, and then next thing you know, you got this huge gap up from, over here when it was around $19 to a peak of $28. If you would have invested, say, into 1,000 shares at that point, you would have made $10,000 in one day. And then after that, it went even higher. Over here it was at $56. So now you're looking at about a $30,000, $40,000 profit. But that brings me back to what I started with at the very, very beginning of this video. And this is something that really bothers me. That's why I keep coming back to it. But before I do, let me just fix my chart, because this is going to drive me fucking crazy. Okay. That's much better. I hate it when the green bars are just empty. I don't know. For me, it doesn't look normal. And I prefer to have my candlesticks and Heiken-Ashi. I gotta redo this again. All right, so we'll do an example of today, MTSL, after hours. So we'll go to 1 day, 1 minute. Now, this is where after hours start. Now, around here somewhere is where Athletic Being from our Discord, Absolute Alerts, he gave you guys the call out to buy in at around, I think it was, I forgot the first one, but the second one I think was at when it breaks 565. So that would be right around here. So if you would have bought in around here, if you hit over here about $6, you made already a decent amount of profit. Take out a percentage of your profit. You hit here, you take out another percentage of your profit. And you see it goes down, and you're gonna want this confirmation right here, but this is not a confirmation, because first of all, this is not a full candle. A full candle will be this. This right here, that's what I call babies. And if you would have bought in right here, this is what they call a fake. It's a fake reversal. So you're going down, now you think, oh my God, look, it's starting to go back up, and then there you go, you get hit. So you always want to see confirmation, which is being a nice, for me at least, I consider it at least a 2 candle minimum, 1 full candle. So, you saw it right here. You took, profit right here or right here, bought in again, took another profit, and that's it. You sold. You took your position, you wait, and then when you see again that it's starting to break the high of day, because if I just don't want to draw right now, but you could see by the line from my cursor that it's breaking somewhere right around here. Now, me, I wouldn't wait till here. When I saw this confirmation right here, I would buy just around in this area, because I already, first of all, I'm up on the day, I'm up on the open. I could afford to take a loss without going negative for the day on this particular ticker. And then I will go over here. Now, as you're doing that, you also have to look at your other indicators. This is not the only indicator. You shouldn't just be looking at charts. Let's see if I can load my studies, and yeah, we'll have to add a study real quick. So I'll add MACD and I'll add RSI. So you could see over here when it starts, the MACD is showing you that there's a sell-off coming, and it's getting red. The bright red, don't forget, means that it's down and it's going down. The dark red means it's down, but it's starting to go kind of back up. So this right here should tell you that it's not done with its downtrend yet. Right here, and it corresponds with the smaller green candle. You're going down still, but now you're going more down, and then you get hit with this. And right here, just following this pattern, right here, what it is exactly what I was just telling you guys that I would buy back in. And it corresponds perfectly with the MACD. The RSI is the relative strength index. Right here, you can see at the exact point when that plummeted, the stock plummeted, that's exactly where the RSI dropped. And you could tell that it was starting to head that way. Why? Because over here, it was above its resistance line. And then you see it starts going down. It passes resistance and it keeps going down. It keeps going down. This right here should be the indicator that something's wrong. There's a sell-off coming. People are taking their profits. Yeah, sometimes you see it go back up like this. But like I said, that's that fake reversal, which you have to look out for. And then next thing you know, boom. So if you bought in, say, over here, which I've seen also several people do on the channels and Discord, and then you're stuck bag hold, and you're sending me messages saying, well, what should I do now? And I'm going to tell you, well, cross your fingers and pray, because I really can't tell you that it's going to go back up for sure. And then as we go through it, you can see that everything that happens in the chart, everything that happens with the price, it correlates. This is, I guess, like a micro recap from the last time. Over here, establish a new support, establish a new resistance, and then it goes all the way until pretty much the end of the day, where it just leveled off. This is called a sideways pattern, by the way. For those of you who are unfamiliar with what a sideways chart looks like, this is a sideways chart. Here, it gapped down. But what I'm assuming is, and this is just my opinion, I could be completely wrong, I think it's going to gap up on Monday. Why? Because there's a lot of people who did miss out. And the volume, I noticed as the time progressed, by about 5 or 6 p.m., the volume was already at a minimum, at a pretty much standstill. As you can see over here, if you look on this number right here, as I point to the candles, you see the volume. it was dropping drastically. So over here, when we were still in, $6 range, volume was 55,000, 675, 65,000. Towards the end, when we had this little dip, the volume was 29,000, and before that it was 9,000. So somebody just sold off, they took their profits, and that's it. It's not a big deal. It's nothing to get worried about. This is, I would say, it has about a nice 60%, maybe 75% chance of gapping up on Monday morning. But we'll see about that. So now that we've went over Benzinga, now that we've went over FinViz on how to, identify tickers for the day of. And by the way, when I say identify tickers, please don't confuse that with me saying you could get up at 10 a.m. and do this. If you want to trade and you want to trade realistically and you want to be good at it, you have to be up at the right times. And when I say the right times, I mean no later than 8 a.m. Eastern time, which is when the market opens. If you're going to get up at 10 a.m. when the market's already open, forget about playing the gap. Forget about catching these things before they start. You're going to get in when everybody is already on that level of they're in it. They're playing. They've been in it. And chances are when you do buy in, you're buying in, and I'll go back to the charts for this one, you're buying in at an RSI like this, where it's already broke resistance, when you should have been buying in over here. You see the price difference? It's just the way it works. For example, this morning, I sent out an alert for CARV at about 6 in the morning. And I said, CARV is going to make a run again today. And if we go to 6 a.m., it was somewhere right around here. I saw that people were selling off, and most traders can't trade at this time. That's why the volume, as you can see on top right there, over here, is 1866. Why? Because this is Webull. Very, very, very few people. But look at the time correlation. 7 a.m., volume jumps to 29,380. And then it goes. Of course, you're going to have the occasional sell-offs, people taking profit. But I think it was around 9, 10 a.m. that the main power play started. Or, I think 9, 10 here. And that's when it started going up. Now, this looks, like small to you, but it's really not, because the price difference from here, 1758 to here, 3558. Well, you could do the math for yourself. That's a huge difference. I don't care if you have 100 shares. I don't care if you have 600 shares. But you just made bank. And right here, you could have sold. And what I would recommend at that point, at least from my experience and my, excuse my language, fuck-ups, is overtrading, which is one of the things that a lot of people tend to do. They overtrade. Set yourself a limit of how many trades you want to execute per day, how much capital you're willing to risk, and make sure that you don't overtrade. And the best way that I found that works for me is I close the trading software. I close down my laptop. I'll pull out my iPad and I go and I watch Netflix, because I know that if I look at another chart and I see another call out, I'm going to be tempted to buy back in. And by buying back in, you're exposing yourself to more and more risk every single time, like clockwork. It is never going to be as simple as you think, where, I'm going to get in, I'm definitely going to win. No, every time you do a trade, you're taking a calculated risk. With that calculated risk comes a price. If you lose, you're going to be sitting there saying, well, now what do I do? I'm bag holding. First of all, why'd you buy in when you should have been looking at the indicators? which I also noticed that a lot of people don't do, and I cannot stress this enough. Do not just take a call out and buy it. You have to do your own due diligence also. Pull up a chart, look at the indicators, and don't just buy. For example, these prices, the reason why, like, for example, I'll go over this real quick, just a brief overview. This little thin line right here, that's called a wick. The wick is basically the extension of the highest level that it reached. So if we're looking at a 1 minute time frame, this candle right here represents 1 minute. In that 1 minute, the top price was about 37.12 and the lowest price was about 28.80. Which means that if you just buy, you could be buying for 34.22 or 34.03, whatever, when you could have set a limit to buy at, say, the medium at about $30 and a couple of cents. So you're saving yourself, that's $1 difference. And that is what the most dangerous part about playing stocks like these, hyperinflated or let's say parabolic stocks. 1 minute could have a price difference of, $2-3. And when you're playing like me, when you're buying 1,000 or 2,000 shares at a time, a $2 price difference is a $4,000 loss, possibly even $8. I've seen people that have lost $50,000 in the span of 5 minutes. So you need to keep that in mind. Always use a bid. Once you get into a little more advanced trading, that's when you could use what I had pulled up at first, which I closed, which is the active trader. But even with this, you have to first of all, you need to have enough, capital to be able to take the loss. If you're looking for day trading and you have $28,000 in your account, consider this little section right here your enemy, because you will lose that $3,000 in a span of 10 seconds. I promise you, it's happened to me. I started off once with $27,000 one day. By the end of the day, I had $14,000 because I thought I was the shit and I could buy market and sell market. It's just not the way it works. So one of the things you could do if you're using the TOS platform, you click here, you add the buy bid, and you add the sell bid. So this way, you're not selling at market price. You're not selling at, you're not buying at market price. You're setting a bid. And believe me, these candles do bounce up and down. If you think that your order is not going to be filled, you're wrong. It will be filled. Eventually, maybe not right away, maybe not within 5 minutes, but within 10 minutes or so, it will be filled. Over here, you could have, say here, you could have set your order from, instead of, buying market at 26.68, set it to 26.30. Eventually, it would have been filled. I don't know where, but somewhere. I'm not going to go looking through the chart just for time's sake. Here, when it starts going down. But guess what? Towards the end, you would have been filled, and then you would have went up 28. So patience is key. You have to have patience. You have to have all, you can't rush into it. Also, if you're down, I'd pull up my main account right now. I just don't want to do it because I'll be posting this on YouTube. But don't give up. If you see yourself in the red, if you see that you're losing money, don't start panicking and sell. You have to, if you want to be a trader, you have to have intestinal fortitude. Without intestinal fortitude, without, the guts to get through this shit, you're really not going to be able to make it, because sometimes you're going to go down, you're going to go back up. Right now I'm holding on one account 700 shares of NIO. I'm down today on it. On another account, I have over 2,000 shares. But I know that the price target for it right now, today was released by Goldman Sachs of 85, end of the year, this and that. You guys also want to use break evens, break even stop losses pretty much. For parabolic moments, like for example, with either CARV or whatever else you want to play when you're going up like this, set yourself a trailing stop loss. So you bought in, say here at 1932, you click here, trail stop, set yourself a trailing stop loss and make it say 25 cents, 50 cents. So it's going to keep going up. But if it drops by 25 cents, which is going to be following the price limit, it'll auto sell. And you could have it sell as many shares as you want. It doesn't have to be your full position, but you get out on, say, you sell 50% of your position, boom. Now you have covered your expenses, you covered your, you also got your wins, you're set. And you just keep going with ideas like that. And the last thing that I'm going to say before I start doing the Q&A, considering the fact that we're about 50 minutes in, is right now, you guys need to be practicing and perfecting your trading strategy. If you don't have a trading strategy, like I explained to you with the resistance and support, and so on and so forth, and looking at the MACD, and I could show you 50 different strategies, and maybe next week I'll hold another session on trading strategies where I'll explain a couple of different ones to you so you can choose the one that works best for you. But unless you have a trading strategy that is set and solid, you need to be working on it every day. Go into simulated trading. Go in, go back test a couple of things that you're experimenting on. Like, I want to buy when the RSI is low and I want to sell when the RSI is high. So buy at support, sell at resistance if you're a day trader. If you're a swing trader, then say you want to add a study, and from you guys that were in the last session, it will be the Keltner. So if you're a swing trader, you would add the Keltner channels, add a disk, change the 1.15 factor to 2.25, so about a 50% increase. Apply. Okay. And change this from 1 day, 1 minute, since you're a swing trader now, to 5 days, 15 minutes. So just looking at this right here, we can see that it peaked right here. Over here, it started dropping. As a swing trader, I see that it hit its, lower band right here. So I would buy in right here. Now, if I was to buy in here, would I make a profit? Yeah. Why? Because it keeps going up. And you could go back and you could do this over and over again. And every time it's going to work. Look, it hits the lower band. It keeps going up. Sometimes it'll hit the average band. It keeps going up. Over here, it drops below the average. It keeps going up. This is what I mean by back testing strategies and perfecting them. You want to have a strategy that you know works, because no matter what kind of call outs you get, you always need to know what you're doing. If you just buy and sit back and think you're going to become a millionaire, believe me, you're going to be bag holding. And then you're going to be messaging me, or you're going to be messaging the Athletic Being, or you're going to be messaging Fistful of Dollars. You're going to be saying, well, what do I do now? Do you think I should hold or should I sell? And I'm going to ignore your message. Either that or I'll tell you, well, shit, it's up to you. Anyways, well, that concludes the part of, finding stocks. So I'll do a quick recap on that. Finding stocks, you got Benzinga, you got Finviz. Don't forget the screener. On the screener, you got your market cap, you got your float, relative volume, and price over here. Benzinga has the same things. And I'll add one more thing. This is quiverquant.com. I like this site. It's free to sign up for, and it gives you statistics on different things. But social sentiment is one of the things that I use it for. For example, you can go to Wall Street Bets. On Wall Street Bets right now, SPY is the top one, SPCE, DNUT, which I'm assuming stands for donut or some shit. But that these are the ones that are top discussed on Wall Street Bets, and we've seen that Wall Street Bets could move a stock upwards. Wish is on the list. NEGG is at the bottom of the list now. Before it was up when the price was moving forward. AMC has been here, which I don't know why it's still there, but you also want to use this site. Obviously, I'll post all these links to you onto the Discord. So this way you will have them for your use. But this is one of the main things. And last but not least, and you get alerts from us here all the time, guys, StockTwits. With StockTwits, you have easy access to, trending symbols. You have your trending right now, which is ATNF, SGOC, TPST, SNOW, STMP, which I mentioned earlier, OKNCY. Then you have your most actives, which is XELA, MMAT, RSOS, all of this. You have the ones that are being watched the most. And through these things, you could actually compare them and, use the bot in the channels, for example, to check the flow, do whatever. Like, for example, I posted on the news tonight that GGPI sent out an alert that it had I think a merger coming up or something like that. I forgot what I posted already because I go through dozens of posts a minute. But I remember I posted this signal and now it's on one of the top watched lists. And of course, you always have, as always, your heat map, which is the same thing that you saw in FinViz. Healthcare right now, as you can see, is down. Consumer goods is up. Why is consumer goods up? Because, well, I think this is temporary personally, but it's up because of the fact that right now with this laid back COVID situation, so on and so forth. Technology, it's a mixed sector. For example, like I'm invested in AMD, I'm invested in NEO. AMD is down, NEO is down. I'm losing money on both of them, but I don't care. Why? Because I did my due diligence. I know that AMD is merging with Xilinx. Xilinx is 144 per share. AMD is 90 per share. And the only approval they have left is from China. They got US approval, European approval, so on and so forth. NEO had the NEO Power Day today. They're building not only power stations and battery swap stations, but now NEO is offering other electrical vehicle makers to be able to use their battery swap stations, which, the price went from 50 to about 45 per share on, I think it was Thursday, Wednesday, whatever that drop was. And I bought in and I'm waiting. I'm waiting because every single analyst right now, and I know some people don't agree with analysts, but they've been doing this for 20, 30 years. So I'm going to be more inclined to take their side. But they're predicting that by next week, NIO is going to be 55 a share. AMD by the end of this month or next month is going to be 135 a share. You just have to do your social sentiment research. And in the morning, always, 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 if you use TD Ameritrade, use this right here, the news. It's pretty easy. You could even detach a gadget, type in your symbol. If you want to just go for anything, just leave it blank. It'll tell you every single news article that comes out. On Benzinga is the same thing. They have a news section. I showed it to you guys earlier, so on and so forth. So that's going to conclude the lecture session or lecture portion of this little exercise. I'm going to go to the chat now, and anybody who's got questions, feel free to ask. And if I could, I will answer. Or feel free to unmute yourself and ask as well. Just one person at a time. All right, I see Baby Yoda. Can you go over exiting a trade in detail, i.e. at resistance, looking at RSI, MACD? Yeah, I could do that. Exiting a trade It's relatively simple. You could go by my method, which is more of like, and excuse my French, but no F's given method. As long as I'm in the green, I don't mind exiting. Why? Because if I see it keeps going up, I can buy back in. So if I bought in here at 1172, I'm automatically going to set a stop loss to say, if I'm buying 500 shares, let me just clear out this active trade. If I'm buying 500 shares at 1172, then I'm going to set a stop loss to about 1150. So this way, you know, I'm not risking more than about $220. Now, I will get out right here at 1385. Or at least I'll get out about 50% of my position. Why? This way I know that I already got some kind of profit. And now I know I'm not going to lose everything. Over here, I'll be able to handle this dip because I know I made a huge profit from this. So your overall, you're going to see, you know, PL day and PL open, which is profit loss day and profit loss open. You're going to see that there. As long as my profit loss for the day is smaller than my profit loss for the open. So say my profit loss open is 500, but now I'm losing 200. I know I'm still up $300, so that's okay. Then I could buy it over here again. Once I get to about here, and I see that it already broke its new high of day, I could take out another 25%. So now I'm 75% out. Over here, I'll take out the last 25%. I'm 100% out. Now I know that I'm waiting for it to break 1683. If it breaks 1683, that means it's broken its resistance, and then I can buy back in. So I'll be waiting, I'll be waiting, I'll be waiting. And right around here, it breaks it. So let's see, 1683. But it probably broke it before. I just skipped over it. Yeah, most likely. Let's see. There it is. It broke it right there. So once I see that breaks, and you guys see this in the alerts channel a lot, 60, like, you know, 250 break ads, $3 break ads, which means when it breaks that, you're doing a momentum play. A momentum play is you're playing on the stock's momentum movement. If it's moving upwards, it's in an upward trend, you're buying. So you buy that momentum play, but with a momentum play, you need to realize that it doesn't mean that you're automatically gonna, that's it, just sit. So with momentum plays, you have to sell quick once you see that the momentum is over, which would be right around here or here. So from here to here, you still made a profit. All right, so next question. Rice, do you usually sell before mergers slash FDA approval or after? Well, I mean, I could tell you right off the bat right now, I would never sell when I know that there's a merger coming up. I would never sell when I know that there's an FDA approval coming up. I would rather risk it because if the approval gets approved, you're looking at, say, I don't know, anywhere from 10 to 100% gains. If the approval is denied and you bought in, say, a week before that, you're not really risking losing anything. I mean, you might lose a couple of dollars, but the reward to risk ratio is very, 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 very impressive. So I would rather buy in low. Like if I know that PDUFA approval or any kind of FDA data is coming out in 2 weeks, I'll buy in a week early and hold for a week because I know I got in at a price which was a week early, which I stand to lose the least on. And in a week, I could go skyrocketing, or maybe, okay, you know, I bought 200 shares. It goes down by, you know, a couple of pennies. I lose maybe 20, 30, 50 bucks. It's not a big deal. Moving on to the next one, Habit. How would you use FitViz to find a good swing trade stock? Is it the same parameters? Yes. The swing trade I showed you earlier, you got your calendar bands right here, which is these 3 bands. Except the only thing with swing trading from day trading is change the time frame from 1 day, 1 minute, or 1 day, 5 minutes. Some people use 1 day, 15 minutes. Change it to something higher, like say 10 days, 30 minutes. You see, you can see over here, it hit the bottom band, it went up. Hit the bottom band, it went up. And up and up and up. Boy, shit, this was a really good run right here. But AMD would be the perfect example for this one. And for this one, I'll even do 1 year, 1 day, which is my preferred for swing trading. Let me make it a little smaller. As you can see, every time it hits that bottom band, it goes up. Right here is one example. It went from 77.12 to $83.40. Not a long wait period right there. This was probably one of the most impressive runs I've seen, where it went from 74 to 94. And that was within about 2-3 weeks, if I'm not mistaken. Let's see, we started on 520. By 620, it was, let's say, yeah, right there. $84 from 74. So that's a $10 increase in 20 days. That's a huge amount of, you are literally just leaving that stock there and not bothering with it. You could trade other stocks in the meantime. That's why I like swing trading. I love to swing trade just because the fact that I could buy a couple of shares and leave them for days on end, not having to worry about them, just checking this once a day. Why? Because this is a daily chart. Each one of these candlesticks represents 1 day. And as long as I see it still going up, I'm holding it. That's it. That's all you got to do. And when does it always go up? Just, this is an example of backtesting. There are other ways of backtesting that are more advanced, but I'm not going to go into them now. But backtesting could be just as simple as looking at a chart. Look, every time it hits that lower band, it goes up. Lower band goes up. Lower band goes up. You could do this all day long. Next question. Was there any telltale signs prior to the NEGG going parabolic? Yeah, there are, but I'm not going to really go into chart pattern analysis in terms of, but in this particular session. But there were telltale signs because the first one started off right around, let's see, I have to change this chart for that. That's why I don't like to go over these things. But over here, when you saw this little jump, the volume increased significantly because over here, the volume was 206,000. Next thing you know, on the same day, the volume was 2 million. And then it goes to, again, 2 million, just a little higher. Over here, it levels out, but, from a volume of 206,000 to 2,916,000, that's a 300% in a volume increase. That does not just happen. So that's why I made that call out, and the next day you guys saw this jump. That's how, that was a telltale sign for me right there. Plus, there was also an article released where Newegg is now going to be building computers to order. So you're able to go on newegg.com and you're going to be able to order a computer that you would usually have to build at home by yourself with your own hands. But instead of doing that now, they do it for you, which is a huge thing considering the fact that nowadays with COVID and all these things, you have to take everything into account with indicators. With COVID out, people were spending more time at home. With mining for crypto, with trading being more active. People want more and more high-end machines. There's a chip crisis going on, which is affecting even EV manufacturers. For those of you who are unfamiliar, EV is electric vehicle. So all these things, and then Newegg comes out with this brilliant idea of ordering their own, making it able for you to be able to order your own custom built computer online. It is absolutely, game changing for Newegg. How did you, let's see, Sridevi asks, how did you post and watch us in morning at 9:29 Central Standard Time that SGOC 375 break on watch? Any specific reason you felt I ran Parabolic? I don't think that was me posting that. That might have been one of the other guys, because at 9:29, I wasn't posting. I posted at around 5 to 7, and then I resumed somewhere after that. Days Grace wants to know if they removed paper trading on Weibo. I don't think they did. I do have a Weibo account. I just don't want to log into it at this very moment, just because of the fact that I don't want to share any kind of sensitive data on a recorded video. But the easiest way to find out would be to just Google it or log into your Weibo. And I'm pretty sure that Weibo still does offer paper trading. Kane said it's still there. He used it today. All right. Well, if there's no other questions, then we're gonna wrap this up. I hope you guys enjoyed. This has came to you from Absolute Alerts. Please subscribe to our YouTube channel. There will be a link posted. Also, we have a Discord. Feel free to join. It's me, Athletic Being, Fistful of Dollars, Flooded, Mini Trades. We're all there, and we're there every single day to help you guys out. And if you need any other, if you have any questions, feel free to reach out to any one of us. Crypto for Life is also going to be there. He is the guy that you should go to with questions such as, when is the next Zoom session, or how do I join, or any kind of basic questions that you have about trading or any kind of acronyms. He'll be the guy to help you. Aside from that, I hope you guys enjoyed the session, and the replay will be posted to YouTube either tonight or tomorrow. And I hope you guys all have a good night, and I will see you Monday, and let's make the money. Good night, guys.